Now, pension systems have been an essential policy and a tool for the economic protection of older adults across the world, really, and countries across the world and regions for a long time. However, in a context of widespread inequality, not everyone enjoys the same level of protection. Women still have lower labor market participation rates than men. These are linked to gender roles and cultural norms by which women tend to assume most of the care work in the family. This compromises their labor market earnings and employment-related benefits, including future pensions. Today, we want to focus on pensions and we want to talk about women because there are a lot of gaps. Let me introduce to you my guests who are joining us via Zoom for this conversation. Samuel Boateng is head of communications with People's Pension, and Lois Nanasewa CMI is compliance officer with the NPRA, that's the National Pensions Regulatory Authority. Good morning to you, ladies.
Good morning, Mama V.
Can I ask what your challenges are this morning? What are you challenging yourself to doing a lot more as a woman?
Well, basically for me, I'm very passionate about women's income security. So of course, one of the most important things to me as a woman is to ensure that I am adequately prepared, for retirement. Yes, I will be preparing, or I am prepared for the everyday things I do, but I am thinking ahead and asking myself, what else can I do to ensure that once I am out of active work, I am okay, I can take care of myself. So for me, it's all about preparing myself for my future income security.
Great. Yes.
Well, just as you said, I'm thinking same. Just that I'm not thinking about only the future. I'm also thinking about the now. So how I'm going to have money, penetrate the financial sector, make sure I take enough risk, because we know most women don't like assuming risk. They don't like exploring the financial sector. They don't like investing. They are quite conservative. So then as a young woman, what can I do to take advantage of the opportunities I have to make more, and also to ensure that when I grow old, I have enough to rely on for my kids and for my husband as well. Thank you.
All right. Well, thank you. I love that. So essentially, we are asking people to choose to challenge themselves for a better tomorrow. Well, it's not just any person. We're challenging women out there. It really doesn't matter your age. Just choose to challenge yourself to have a better tomorrow. And the conversation that we're having is for all of us. This is something that we usually don't talk about, and that's why it's a good time to focus on this today. Perhaps I should start with you. What are the inequalities in pensions? Specifically, we're talking women.
So Mama V, there are quite a number of them. And one of them, or a historical one, is the income disparity when it comes to the various genders, that's men and women. So historically, men would earn more than women, especially in the formal sector, even if they are doing the same level of work. And it's one of the things that does not really help women. Now, when you come to the informal sector as well, you'd realize that women will be found more in casual employment. And so they do not earn as much as their male counterparts. Again, women will take time off work during to take care of family, to start a family, to care for sick relations and all of that. That gap, where they are out of employment, what it means is that if they were saving towards their retirement, or they were putting money aside towards their retirement, they would lose that, that period, because they wouldn't be in active employment to be able to save that much. Again, women live longer than men. That's according to research. And women are said to live 2.5 years longer than men. So what it means is that their savings, whatever savings they have for retirement, should be able to take them over a longer period than men. And of course, an extra lifespan when you are old and everything means that you may have additional medical costs. Now, when men we also know that typically you find men, dying earlier than women. Like I said, they live at a shorter time than women. So it means that if there was a cost sharing system for a couple, for example, when the man is no more alive, it means that the woman has to now shoulder all of those responsibilities. And if she does not have adequate savings, then again, it puts her in a very tight corner. So these are some of the reasons why you'd find women not having enough money. And again, women will save smaller amounts because, of course, they are engaged in casual labor more of the time, especially in the informal sector. And so these are some of the things that does not really go in the favor of women when it comes to saving towards their retirement.
And ultimately, we know that when they finally go on retirement, then they feel the effects of what you just outlined there. Lois, pension coverage remains limited from your perspective, from the NPRA's perspective. Can you help us appreciate that?
Okay. Thank you very much. As you rightly mentioned, pension coverage is quite limited, and we've been trying to penetrate the workforce, but then we are having more challenges with the informal sector as compared to the formal sector. With the formal sector, it's quite easier because then we know most of the things are mandatory. Even with the Ghana, our Pension Act, the Tier 1 and the Tier 2 is mandatory, and most of the formal sector practice that. But then the informal sector falls under the Tier 3, and that one is voluntary. It's not mandatory. So then you realize that most people don't do it. Since it's not by force, it's not demanded by the law, most people don't take advantage of it. And most of our women are suffering from this as well. They don't take advantage of it. And it's largely due to the fact that some don't have that much information on pensions at all. There's low pension literacy out there. And some don't even have much information about the financial sector itself. So then they don't have a lot of information about what they can do and what they cannot do. And, back in 2017, what happened with the banking sector, the cleanup exercise. So then most people find shortcomings with that. Most people lost courage in the financial sector because then they are wondering, am I going to lose my money? Should I put my money in anything formal with the banks? Am I going to lose it? Am I going to be moving back and forth looking for my money when I'm old and now I'm frail and I can't be doing that work? So then they don't have much information about the things that we have to protect them. And with the pensions, there's a lot of advantages. And it's not such that someone can just take your money, take advantage of it, and get missing out of the blue. There are lots of protective covers for you when you're doing pensions. And we have the tripartite system. We have the custodians, the trustees, the fund managers, and they are all doing their bits to ensure retirement income security. So then we wish to employ most of our women and also the informal sector to take advantage and do something for themselves, to get involved in the pension schemes, to invest something, no matter how little it is. And you realize that it's done to suit us. So then right now we have various platforms to do that. We have Momo, we have a lot of the trustees have different rollout programs. So you can use the mobile money to pay it. You can do it as if like the Susu kind of thing. So then it has been brought down to our level. So let's all take advantage of this thing and make sure when we retire, we have something to lean back on.
Okay, so let me come to you, on the back of what Lois has just said. I guess your team will go out there and get people to sign on to some of the pension policies. What has been the challenge, particularly with women signing on?
Well, like Lois rightly said, the first thing is education. So most people do not even know that there's the opportunity for them to now save for their retirement. People are still set in their thinking that pension is for the formal sector. So they know that, yes, my husband has gone on retirement and he'll be receiving his pension from SNIT. They have no idea that now there's the opportunity for them to also sign up for a voluntary pension scheme, pay any amount that they will be able to at any time of their convenience. But of course, all of it geared towards ensuring that they have saved significant amounts that they can live on. So that is the very first challenge that you'd realize when you go out into the market. The next one, like again, like Lois said, is the financial sector cleanup. So first of all, people are not educated enough, do not know that there's the opportunity, and now there's this financial sector cleanup. And you go to them and you say, and you know, these programs that they were with, or these savings that they did, were even short term. And look at what happened with these short term savings. Pension is long term. If somebody is 30, 35, they are saving for like the next 20, 25 years. And so if you tell them that they should be saving for that long and they cannot touch their money until they go on retirement or until there's some invalidity for which reason they can't work, it doesn't really sit well with most of them. They are very apprehensive and they feel as if, look, I cannot put my money into an investment that is going to take this long to be able to assess. And so one of the things that most of the trustees or the companies are doing is to, you know, introduce very flexible things that they can do, where, for instance, you can do a withdrawal at a certain time, so that even though this is a long-term savings instrument, because we want to build trust, we want to tell you that, look, your money is here, it's not going anywhere. You have immediate needs. And for that reason, if you are hard pressed at any point in time, maybe over a period of 6 months, if you save, you can come for 50% of this money that you have saved.
Okay.
You can come for, yes.
So
those are some of the things.
Yeah. Okay, great. Even though, I mean, for pension, it's not advisable that you touch it, make partial withdrawals or anything of the sort, because it's for the future when you're no longer working. But we've talked about, and Lois, we've talked about the issue of women in the informal sector, some of them doing part-time work, some of them doing the care jobs. So some people are taking care of the elderly, the disabled, the elderly people in their families. How do you have a pension plan for a person like that? So let's touch on the gaps and how we can bridge these gaps. We know where the women are. We know the kind of work that they are involved in. What is the realistic plan on the ground that they can get onto?
Okay, so for instance, one of the things that we as players in the industry should be mindful of when designing these pension schemes is the peculiarities of the women constituents that we have. We need to understand the challenges they have due to systems and policies that are already in place. So we need to design schemes that will enable them to save. So like I said, introduce a withdrawal component so that they can do withdrawals at certain points. The law allows for that. And so they are able to do withdrawals, even though it's a long-term product, and then it builds their trust. It tells them that, look, eventually when I come on retirement, I can still access my money. Again, there needs to be that collaborative education between the players and the regulator. You know, when the regulator leads the charge in making sure that there's very intensive and extensive education on pensions, it boosts trust as well, because now they won't be looking at you as a private person coming to them and telling them all these things. They know that there's some government agency involved that is ensuring that their money is protected, their funds are safe. Again, we need to also come up with policies and programs that would ensure that the problem of inequality is taken away completely, you know, by making sure that we are also bringing these women into the financial inclusion space. Because let's not forget that that is also one challenge that women face. You know, most women are underserved when it comes to financial inclusion. And so in as much as they are not literate, in as much as they do not have adequate education, yes, now there are a lot of tools that we can introduce to them. So there's the USSD payments, which are very simple apps that they can use and which they can even use in places where there's no internet connection. And so we also do digitally driven products so that we are not just helping them to save, but as well bringing them into the financial inclusion fold. And I think that when we do some of these things together, as an industry, those are some of the ways that we can really get to these women constituents and introduce also, various products. So you can have a life insurance product, for instance, embedded in your scheme. We have that. So that when these women, for instance, die, they will leave children behind. They will be taken care of because of this life insurance. So the woman is convinced in her mind that whether she's alive or she's no more, there is some money to take care of herself or her dependents at any point in time. So I believe those are some of the ways that we can help to ensure that a lot more women are convinced, they are comfortable, and they'll sign up to these pension schemes.
Okay. Lois, so, Ya talked about if the regulator takes the lead in educating, especially when the regulator is a state institution. How much of that have you been doing as MPRA?
Okay, thank you very much. MPRA has a rolled out program. We have the market activation that our corporate affairs directorate handles. So then, and we have various zonal offices. We have some scattered all over Ghana, and they take care of the various regions. So then we go out to the markets and we educate them in their various dialects, their local languages by dramatizing and all that. And you realize the cost of running an informal pension scheme is quite high as compared to a formal one, because then for the formal one, it's easier. The accountant knows at the end of the month, I'm supposed to deduct this amount and take it to the bank and all. So you don't do much of a talking. But when it comes to the informal sector, they are scattered all over, they are in our marketplaces and there are various different places. So then the corporate trustees trying to target them and to work with them is quite expensive. So then we've engaged World Bank and we are trying to come up with a technology, a fintech, so that it will help reduce the cost of running informal sector pensions. So that's going to help the corporate trustees and encourage them so that most of them will be willing to go into the informal sector practice.
Okay.
Most of the trustees are targeting the formal sector, and most of them are in Accra. They are not going to the hinterlands and to the other places. But when the cost of doing it is cheaper, I'm sure most of them will be willing to do that.
Okay. So, Lois, let me ask you. I go to Malamata Market a lot, and I do the business districts in Accra, the central business districts. How much or how many of these women who sell out there in the markets are on pension schemes?
So maybe I'll take that.
Okay.
For us, we are very aggressive when it comes to the informal sector. And so in Makola, that is one of our key areas. So in our database, we have about 40% of our customers being women. And these are typically market women, porters, women involved in very casual jobs, like I said. So when the division is not encouraging, you would prefer that you have a lot more women. But like I said, it takes time. And so we have these women. But you realize one very interesting thing is that you realize that these women save consistently, although in smaller amounts. So you'd have a man saving once in a while, but his money will obviously be more than the woman. And so you'd realize that these women are very interested in the product. They understand it when you talk to them about it. But there's also the immediate needs that are, pulling them on every side. And so they find it difficult to be saving larger amounts like you would require that they would.
Okay.
But we are making inroads. It was difficult from the beginning, but we are making inroads. And one of the ways that we are also doing that is to collaborate with partners who have very large subscriber bases, like the telcos. So we have products with Vodafone, we have products with Retire, and these are all targeted at these women. It's to build trust, it's to build credibility, and it's to also give them the opportunity to save very easily, because they already know these companies are in the system. And so when they receive, for instance, an SMS that says, or an IVR, we normally use voice messages for them, that says they can sign up for a pension, it sits well with them.
Okay.
And then they know that, yeah.
So there's
they
one.
Can also use their, sorry.
Yeah, I was just going to say there's one thing consistently saving, but how much you're saving is also essential. So are women retiring comfortably even when if they're on a pension scheme?
Yes. So we tell them, we educate them about, how much they can save. We have things like pension calculators, which help them to project, have a savings goal. So you ask them currently, maybe how much do you live on in a month? How much do you think you can live on when you go on retirement? And then based on that, you will be able to input whatever they're saying into the pension calculator and give them an idea of how much they would earn at the end of saving for a certain period and how much they can live on. Again, we incentivize them. When you tell them that, okay, save this amount over this period, I'll give you this, I'll top it up, I'll match it up. All those things help because then they know that there's a certain objective in mind, and it's to just help them save more, encourage them to save more. So those are some of the ways that we encourage them. But most importantly is to be able to sit with them and ensure that they have a certain savings goal in mind that they can save towards. Otherwise, the saving is haphazard. There's no plan. And at the end of the day, they may not have enough money to live on. But because we want them to retire very comfortably, a savings goal is very essential in the in the cycle of ensuring that they understand the products and then they are getting onto it.
Okay. Lois, help us differentiate between savings, current accounts, and a pension plan. And tell the women out there how they can enjoy or live comfortably when they are 60 plus and they don't have to go to the market or look for another job. Because they don't have regular income coming in if they are on a pension scheme. So help us do the differentiation.
Okay, thank you very much. With the savings, mostly savings is geared towards, it's more of setting apart an amount of money, and it's geared towards a project or maybe something that, let's say a typical woman will want to save towards her wedding or to save towards giving birth and taking care of the children's school fees and all. And it attracts a certain fee, with the banks. But then when it comes to pensions, there are products, as Yam mentioned, and that one they'll give you a tailor-made something that will suit you. So you tell us how much you will want to contribute every time. And pension is geared towards your old age. So then that bit of savings that you can always go and touch the money, we actually discourage that when it comes to pensions, because then pensions, you're supposed to save it over a longer period of time so that you will see its impact and you get the investment that it needs. With pensions, we are not so aggressive in investments, because then we think about the safety of the investment as well. So then with MPRA, we have an investment guideline that we've rolled out, and the corporate trustees, which is one of, it guides their investment. So they don't just invest anywhere. They don't just invest in as a normal investment banker would do and be aggressive about investment. Pensions is quite reserved. We think about the safety of the investment. And when it comes to pensions, when you check our ads, Section 209 of the Pensions Act, you realize that pension is protected. Pension assets and funds are protected. So should there be a fallout of a custodian or anything, your pensions you're not going to lose out your pensions.
Okay.
So then that's the little difference when it comes to pensions.
All right. Yeah. Can you just add a little bit to this? And I want you to break it down so that people can understand how they get to enjoy when they finally retire.
Okay. So, like we've been saying before, you need to have a certain goal in mind. You need to know your current income or your spending pattern. and then you can do a projection based on that for when you eventually retire. And then you can use that as a guide to be saving either daily, either weekly, or either monthly into a pensions scheme. You do that consistently. Consistency is very important. And then the amount also being significant is also very important, because it's the only way that you can build up enough funds to be able to save. Again, there are various ways that you can save. Technology is really leading the way for us. And so we are introducing ways that people can save. I mentioned the USSD system earlier, where you can just dial a USSD code, you register, you set up, either a certain frequency of payment and a certain amount. And then there's that automatic deduction that can be done and pushed into your account. You are credited, you receive messages, just to let you know that your money has been received and it's been put into your account.
Okay.
Again, there are the incentive programs I mentioned earlier. That is to support these women to be able to save towards their goals that they have.
Okay, so this is the understanding that I am hoping that I could get our viewers to also get. So when I retire, what happens? I don't have to work, but you'll be paying me a certain amount of money based on the projection that I have made with you and the contributions that I've been making?
Yes, so when you retire, the Tier 3 or the personal pension scheme allows you to either take your money as a lump sum, or we can spread it based on the discussion that we have had with you, and then we pay to you in monthly installments, just like the SNIT pension does. So you can either take a lump sum and then you use it, some of it, and use it for something that you want, or you'll be taking it over time. Okay. So those are some of the ways, exactly. So those are some of the ways that you'll be able to assess.
Okay, so if I go on retirement, how soon can I get my lump sum if that's how I want it? Because, sometimes the processes also deter people.
Exactly.
It either encourages them more.
Yeah, that's very true. So what we do is that at People's Pension Trust, we make sure that even before you get to the age of 60 years, maybe at 57, we start, prepping your mind that you soon be going on retirement. So if you want to increase your amount, increase it. If you want any other education, we take you through it so that you are well vexed. So when you hit 60, we have your database, we have all your details. So when you hit 60 years, you are notified that, look, your retirement is due. So we need to engage with you to find out how it can be done. For instance, this withdrawal I was talking about, in maximum 72 hours, you have your money. So we engage them and ensure that even before you hit age 60, the process that you have to go through. So that once you retire, there isn't too many impediments in the way, which would let you be sitting at home, waiting for your money, doing a lot of crisscrossing up and down. We engage very aggressively with our clients. We make sure that we are always engaging with them to ensure that before they turn 60, they are already aware that they need to be doing some of these things. And so by the time the 60 comes, there's that process. So it's very seamless. And then they'll start receiving their money.
All right. So ladies, we'll have to end this conversation here, but I want to come to you. We can do the board or the calculator so we can help people out there, do some calculation. It's good for people to know if I've been saving 200 Ghana cedis every month and I have to do 20 years before I reach the retirement age, how much will be the lump sum? And if I want to break it down and receive the money as monthly installment, how much would I get? So we can fix a date and have that conversation so we can help people a lot more. But just one last question, maybe you can help me. TPFA transfer, what does that mean? And this is in a statement, a pension statement that I received not too long ago.
TPFA. I think I may have to get back to you on that.
Okay.
Yeah, I think
Lois wanted to say something.
Yeah. I think Lois wants to step in.
Okay, so the TPFA is a temporary fund. So you agree with me that initially we had only SNITs handling the pensions in Ghana. So with time, then the tripartite thing happened. The 3-tier pension scheme happened. So during that period, that we were rolling out from only the SNIT playing the role to the three party system, there was a period, a lapse for a period. So then those who were moved from the old scheme based on their age to the new scheme, as of 2010 January, if you were below 50 years, you belong to the new scheme. That's the Act 766. But then if you belong to the old scheme, if you were 50 years or above as of 1st January 2010, you belong to the old scheme, meaning every contribution due you was made to SNIT. However, if you belong to the new scheme, then part will go to SNIT, then part will go to a tier 2 scheme or a tier 3 scheme. So during that period that we were registering the trustees, the trustees were not existing then. So then MPRA created a temporary fund to hold the money. Because then we can't just let the money lie there like that. It has to be working. It has to be earning interest for you. So during that period, that's the TPFA. That's the period that your money was in the temporary fund.
Okay.
So then after you enroll on a scheme, then we transfer your money to a scheme. So there are still some employers who haven't moved their monies to a scheme. And we are encouraging them to do that. But then after you get enrolled on a scheme, with a tier 2, then you move your funds from the TPFA into the scheme.
Thank you for that explanation, because I'd been thinking about it and I didn't know where that came from. So we will make a date and have another conversation and make it more interactive so people can bring forward their concerns as well. But I thank you, ladies, for helping us with this conversation. Samuel Boateng is head of communications with People's Pension Trust, and Lois Nana Sewa Esiama is compliance officer with the National Pensions Regulatory Authority. Happy International Women's Day, ladies.
Thank you, and same to you, Mama.
Okay, well.